Okay, folks, welcome to the best stock charts for the new trading week. Happy Sunday and Sunday Night Futures Live. We have a lot to talk about, but first, I'm going to tell you a little story, a little ditty, if you will. The ditty is this: is that let me share my screen for a moment. First, I want to show you this. Keep this in mind for the story I'm about to share with you. There we go. The Rooftop Bar, Cocktail Lounge, Empire Hotel. Drink voucher. Valid to today. I had two, one left. So let me share my screen. So I had a really good weekend, but funny in a number of ways. And we have a lot to go over. I want to let these futures settle out here, because we had a serious event occur last night, and we will not be taking it lightly. I do have a strategy developed. However, it all depends upon how we open up tomorrow morning before we execute. Let me share my screen. Let's get going. So you may be saying, wow, this is a very strange beginning of the new trading week. You're absolutely right. We were at the David H. Koch Theater, the Koch brothers, at the Lincoln Center in Manhattan last night. I bought a set of tickets for part of my wife's Christmas present, and we went in last night, and it was really a spectacular show. I recommend it. Extremely talented artists. I was interviewed for my opinion on the show. Why? I have no idea. They were very aggressive. When I got there, they wanted me to be interviewed. When intermission, they stopped me to remind me, hey, listen, we're going to interview you after the performance ended. They met me at the door, leaving the auditorium and going into the lobby to go have that interview. I have a photo of it here as well. I posted it last night to the forum. Here we go. Here is me being interviewed last night, and this is for TV over in China. So a really great night. But the story that I wanted to share as we wait for the futures to settle out is, so when I was booking the room, I figured, you know what, let's stay over at the Empire. We had stayed there before. They have a great rooftop bar. And so I said, let's stay over, and just so we don't have to worry about drinking, driving. I don't approve of drinking and driving. So we had dinner there and whatnot. So we just had a little mini vacation. And so when I was renting the room, reserving the room, they gave me the option of paying like an extra $30 for 2 drink vouchers. Now, anybody that's been to New York could tell you one drink could cost you, including sales tax and fees and whatnot, could cost you $30. So I figured, it's an easy $30 that I'm making here. Not quite. So we go to the rooftop bar before the show, before dinner, and I have my handy dandy, as I showed you earlier, my drink voucher. And I said, you know what? I haven't had a Macallan 18 in, I don't know, a number of years. So, me having Macallan 18, I'm in a really good mood. Now, Macallan 18 is this Pimp Mac Daddy here. And it's just really, what are they charging here? $350 a bottle. So rarely do I drink it. So I have my drink voucher, and I figure, they're not going to let me get away with this. I'm probably going to have to pay something, maybe $10, whatever. A glass of this stuff at the rooftop bar at the Empire goes for $80 a glass. The fine print on here, I did check later on, fine print on here was this is limited to $25. So my free drink at the Empire cost me $63 plus tip. So that's my tale of woe. Otherwise, do I regret any of it? Well, I didn't use the other voucher because I couldn't afford the free drink over at the rooftop bar. It's not a matter that I couldn't afford it. It's just that on the principle, I'm not going to pay $80 for a glass of booze. So we headed out to PJ Clark's for dinner. Then over at the show, PJ Clark's was very, very good. Steakhouse right next to the hotel. So zero driving, zero cabs, nothing like that. We even went back later on. They had these really great oysters, Oysters Rockefeller, Clams Casino, outstanding, great Parmesan truffle fries, awesome. So a really great weekend. Now, as I've bored you enough, we've let the futures settle down quite a bit here. So let's take a look at how we are opening up the averages here on let's go to the E-mini contracts. And I'm not surprised here. They tried to take it down. They rallied it to close it. No, not close it, to bring it down positive. Now, last night, as I started getting a lot of the alerts from the Slack forum that this has been going on, the missile attack from Iran over onto Israel, I figured it was going to be another 1,000-point down day on the Dow. But I was monitoring the news all day long, and I think it's all to do about nothing. I'm sure that the spin doctors have spun it as though we won the victory, and that's the way we're going to leave this with our heads held high. We were involved in the defense of Israel, which is fine, and I believe a few of them got through. The missiles or drones, whatever, got through a couple of military bases, but it looks as though casualties are minimal, which is always great. And this could perhaps be behind us for the time being anyway. But it makes a lot of sense as to why the U.S. dollar and gold have been trading in tandem for the past couple of weeks. This was all very much anticipated by the equity markets. The question is where to from here. If we have an escalation, then the trend continues. Dollar up, gold up. If it's over, then you're going to get a resumption of the inverse correlation of the U.S. dollar and gold. So as we open here, equities are opening up positive, and it's not unexpected. Now, that could all change when we open up tomorrow and if we get news coming out of the Middle East. So as it stands right now, it doesn't sound as if there's going to be a counterattack on Iran. It is a presidential election year. I don't think the administration wants a big battle like this brewing. So it looks as though, as it stands right now, and the markets are telling us right now that this is all probably a one and done and over. So let's say hello to folks and let's get this party going. Mike, welcome. NVIDIA, well, you have earnings season that begins this coming week. So we may get a bid under NVIDIA. SMCI, which I trade, which is highly correlated to NVIDIA, that left a day out weak on Friday. We'll see what the morning brings. But it looks as though the way we closed on Friday, we have more downside here in the equity markets. Okay, there's your watch list. Jody, welcome, Jody. Talon, good evening. Good evening, America. Love America. Mike C, again. Franklin, I'm crew. Yeah, Sunday already. Why were you being interviewed this weekend? Will there be a post of an interview? I don't know whether or not they told me they were going to send me a link. They sent me the photo. I don't have a link as of yet. So if I get one, I'll send it out. I don't even know if I'm going to be cut or, there was a question as to whether or not it was live. I don't think it was live. I think that it'll probably be edited along with a couple of other people. So I'll do a little bit of search on it. I'll find out. If I find anything, I'll certainly post it out. My brother was asking me the same thing today. And the reason why they wanted me, I have no idea. I have really no idea. Uh, Strange, to be honest with you, but they 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 definitely had me as one of their focus groups. Watching possible upside warning. Okay. Uh, yeah, it was a very very good show. I mean, it was you had these great Chinese dancers, really talented people, and you had a couple of Chinese tenors, one female, one male, incredible voices, and you had this one lady that came on. Her name is KC or TC, something like that, and she plays the two-string guitar. I'll call it a guitar that gives you that Chinese musical sound. Very pointed, but very very talented. I mean, really just talent overflowing last night. I'm really amazing. It humbles you. Yeah, it was a really cool time. It was really a good night. Yeah, Mike. There's nothing wrong with a good Slurpee. Uh, so definitely, I'm a Slurpee guy, a big gulp guy. So every once in a while, though, an 18-year-old certainly makes the weekend. Uh, yeah, right. Uh, Listen, even if I was a billionaire, I probably wouldn't be buying 18-year-old scotch at $350. I grew up poor, so it's just against my grain. There's a lot of good scotches out there you don't have to pay $350 for. But I'll tell you, God darn it, it was good. It was good. And I did continue drinking the 18-year-old. I went to PJ Clark's, and it was like half the price that it was up at the Empire. So I did have one or two more after that. Well, I didn't have the pizza. I had a really great bone-in New York strip. Delicious, delicious, delicious steak. Countdown to the Kentucky Derby. Larry, that's his show. Larry from Kentucky. 19 days. I know you will keep us up to date. Uh, Bitcoin very attractive. Yeah, I was watching last night. Much to my wife's chagrin, I was I was kind of in tune with the markets, and the lady sitting next to me, she's like, "That's." I had my phone on. I'm watching Bitcoin, and the lady goes, "That's kind of disturbing." I said, "Okay, I'm sorry. I do apologize," and shut it down. Golden oil going up. I Be careful there on the gold side. Gold bearish reversal bar, gold mining stocks bearish reversal bar on Friday. Be very, very careful going into this new trading week. I'll probably, if they, we'll take a look in a moment about gold. If they spike gold tomorrow and we have no escalation on, as a matter of fact, I may even do it tonight in the futures market. If they spike gold up tomorrow, I will probably be selling a call spread on gold because I think that gold is going to do a pullback here. I know I'm a big bull on gold, but we have to watch the charts, and the charts are saying we're a little bit tired here. So we'll get to it in a moment. We'll see how the markets are reacting. This is a 5-minute chart that we're looking at, and so this man knows. What is it? Oh yeah. I grew up very poor, quite poor. Alan, you're very welcome, sir. Okay, let's get to it. We have the E-minis that are open, and we're up spot 6%. They tried to take it down, obviously. Bullish reversal bar. We are now into what? Our second 15-minute candlestick. Let's take a look at what it feels like, get a vibe, and it looks as though we are going up higher. This is probably going to be a relief rally for the equity markets. Unless, of course, we get an escalation. If we get an escalation, that all changes and changes very, very quickly. Let's take a look at the NQ. This is the NASDAQ 100. And we are up less than we are on the S&P. Back to a 5-minute chart for a moment, get a vibe for what we're doing here. We're holding the gains, consolidating. Looks as though we're going to press up higher. Taking a look at what do we have next? The Russell 2000 up. Wow, RUT up over a third of a percentage point. That tells me that yields are down, and it looks as though we may have a little bit of a leadership group here out of the Russell 2000. So let's take a look at the Dow. Then we're going to segue over into the 10-year yield. And then we'll get a better feel for how. Let's go to the mid caps first, actually. Mid caps up, spot 29%. Good open, strong open. And the Dow was a real laggard last week. I mean, really not a good week for the Dow Jones. Where are my Dow futures? I just had them. Here we go. And they are looking pretty good, up spot 14%. So going into the new trading week, we have the small caps up, leading the market. Then we have the mid caps. Then we have the S&P. Then we have NQ and the Dow probably neck and neck right now. So odd leadership group, but that tells me that the 10-year is probably down. If it's not down, then that tells me that the rally in the small caps is suspect. No, yields are up. Yields are up. We're off the highs of, this is now a 30-minute chart. We're off the highs of the session. But I got to tell you, this is looking bullish here to me. We're down. Yeah, take a look at your Bollinger Bands in orange, your Keltner channels in white, off-white, tan, eggshell, mauve, whatever you want to call it. And it looks as though this is going to press up higher. Now, that is not a good thing for equities. There we go. That 30-minute candlestick just turned green. This is going to press up. Okay. Very bullish chart here. So, I look at this and I have to think that, okay, perhaps we're going to get a rally in equities as a relief rally, but in all probability, it's not going to be sustainable. Not with a 10-year yield that is threatening a major move up higher here. So I want to be bullish on equities. I really don't care. I'm short, to be honest with you. I have a short position on, so it doesn't matter to me one way or the other. And we have other positions on that, frankly, just keep us neutral. We're just collecting premium. So in reality, I don't care which way the market goes. So if we had a down day tomorrow, that would really be great for me. I probably would have taken shorts off the table, but we're not going to get that. Apparently, we're going to get a relief rally in equities, but yields are moving up higher. What that means is that I'll probably be leaning into shorts if we have an up market tomorrow, probably on light volume and a rising 10-year yield. Let's take a look at the U.S. dollar. All right, so the 10-year yield just took out new session highs. That alert is just triggered off. Let's circle back for a second. I just want to take a look at what the RUT is doing because they're very interest rate sensitive and they don't care. They're going up higher, up nearly a half percentage point. So let's not delude ourselves here. What we're dealing with is a relief rally, and that's pretty much all it's going to be. When does it lose steam? I have no idea. But I believe that if we take out new weekly higher highs on the 10-year yield, in all probability, equities are going to falter and then begin to roll over. Moving on to, we want to take a look now at Forex commodities. And to do that, we want to take a look at the Dixie, which I had up here. Now it's gone. And the dollar is pulling in a bit. We've seen a lot of activity on Sunday nights lately of the US dollar, and that's not usual. It's usually very, very quiet. You have more action in the euro, yen than you do on the US dollar because they open up sooner than the US dollar does. So we're getting some action here tonight. We're down at current, and it could be that this risk off environment is coming off, right? We're no longer worried about what's Iran going to do. Probably a little bit worried about what Israel's going to do, but again, Israel's not going to do anything we tell them not to do. So it's an election year. Do we want a war in the Middle East where you have oil prices skyrocketing? I don't think so. They're up high enough. They're getting ready to move up higher. So if they do decide to go down that road, then you're going to see inflation, ridiculous inflation moving forward. So dollar weak, that tells me it's a risk-on environment. Let's check out euro yen. They had a horrible week last week. Dollar very bullish on the week. Euro opening up strong, equivalent to a move on the US dollar. Yen is probably up slightly. No, it's actually down. We were higher. We've reversed. Let's take a look at gold. All right, so gold is down now. It had a very rough Friday, and they tried to push it up. It was rejected. I just want to see what a 10 Delta Iron Condor is looking like on gold. As a matter of fact, just do a vertical. I'm more bearish on gold right now than I am bullish. A lot of action going on here. Okay. Now we're down $8 on gold. Really getting hammered here. I doubt this is going to make a new higher high. Yeah, they're selling it off now. If they rally it up into this Keltner channel, I may open up a trade on gold, but it'll be short. Okay. Moving on to silver. Silver down. Wow, they're really killing silver right now. So again, they tried to take it up, rejected. So it looks as though we're going to get a little bit of a pullback here on silver, gold, unless, of course, again, if we get more flare-ups over in the Middle East, well, then it's going to be game on to the long side, dollar and precious metals. But it looks right now we could get a rally in equities because we have a risk-on environment, a rally in the dollar, a rally in silver, gold. You know, for them to trade in tandem, we just got hit on that that alert on gold. If for all of them to rally as long as they did, that is clearly a an environment where you have geopolitical risk, and that risk may be coming off right now. So I'll probably do that trade later on. Let's take a look at energy, light sweet crude, weak. A little bit of a reversal here. This is only a 1 minute chart. Let's get off a 1 minute chart. So they tried to take it up higher. And you don't need the news to tell you what's going to happen next. The markets know what's going to happen next. And the way we interpret what's going to happen next in the markets is oil going up? Is there a concern about the Straits of Hormuz getting closed down? Is there a concern about attack on Iran and the fact that their oil may come offline? Is there a worry that Iran may attack the oil fields of Saudi Arabia and cause all sorts of nightmarish scenarios? Clearly, no. So I don't need CNBC. I don't need CNN. All I need is my terminal to tell me exactly what's going to happen next. And what this is telling us is that with dollar coming off, gold coming off, oil coming off, clearly with equities moving up higher, it's a risk-on environment. So we trade the market that we have, not the one that we want. Bitcoin still down 2%, coming off the lows. I think that this is probably a buy. I have not done a lot of analysis here. I don't know where we're at in terms of historical support, but with equities moving up higher, I couldn't imagine that gold or Bitcoin would not be moving up higher because it is a risk asset. It trades a lot more closely to the S&P 500 than it does to gold. Much more highly correlated to the S&P 500. So if anything, probably a short-term trade up to the upper band of resistance, which is at current 68,199, just shy of that 70,000 mark. It looks as though we put in a lot of overhead supply there. So I'm not betting on a breakout. However, I think that there is a short-term trade to be had here on Bitcoin. So let's take a look at Nat Gas, of which we have a long position on. That is NG. And we are up a 1/4 percentage point, a little bit more than that, actually. And I'm becoming more and more constructive on Nat Gas. Here's a weekly chart of Nat Gas. And primary goal number one, or primary observation number one to buying a stock, commodity, cupcakes, whatever you're going to buy that is in a bear market, is that it must stop going down. And Nat Gas put in a bottom back here the week of 219. And ever since, we have been consolidating very, very nicely. And here we have a higher low. Now we're looking for a higher high. We got one last week. We couldn't hold it. And I think you can get a very serious short squeeze on Nat Gas. New weekly higher high. Sticking with commodities for a moment. We got to check out live cattle. That New York strip was just too good last night. So we've seen a big pullback in live cattle, which is outstanding. The price is certainly not reflected on my bill last night, that's for sure. And we're Outback current, but it looks as though this rally in cattle has run its course. Now, you can't be convinced of that until, of course, we break down below this prior low here. And if we break down below that support level, we will have entered probably a new bear market on live cattle, but we must close down below there. Now, moving on to ag. Well, let's stick with energy for a moment. Let's go back to energy. Gasoline prices. RBOB has been very, very strong. Still very strong going into the new trading week, up spot 19%. Copper. Wow, really ripping here now. Up 2.21%. Platinum. I warned of a breakout last week. We got the breakout. Watch for a retest right back down here. I would not be a buyer here. Not yet. Let's move this up a little bit. Okay, good. Next to a round number is nice to do. Palladium. Oops. Try that again. Palladium. This is setting up nicely as well. Let's check in with agriculture. Which is now off my chart. I think this one needs to do something about the number of limited names you can keep on your list as recents. Here we go. Corn. Corn looking very good. I mean, the last I looked at this was midweek last week, and we were down on the week. But by Friday close, we had a reversal week, a bullish key reversal bar, and it looks as though we're about to break out higher. So the thing to remember here, and we need to take a pause, because we've talked a lot about the DBA, and this thing has been on a tear. Now, why is the DBA been on a tear? Well, you've had 8% of the DBA is cocoa. Cocoa has had a mind-boggling rally this year, and a lot of these gains are attributed to the fact that you've had agriculture names like wheat, soybeans, corn stop going down, and cocoa going like this, along with coffee going like this. So now what you're beginning to see is an overbought condition on cocoa. Coffee could still have more room to run. So if you get corn beginning to move up higher, as it appears it's ready to do, weekly higher high. Let's take a look at soybeans. Soybeans, this is not a horrible chart. It looks horrible, but let's clear this up. And you may be saying, Bob seems to be spending a lot of time out late on commodities. There's a couple of reasons for that. Equities are boring, they're expensive, and there's not a lot of upside to be had. We have a lot of geopolitical risk out there. We have inflation on the rise, and the money is moving into commodities. Look no further than gold, oil, RBOB gasoline prices, live cattle, cocoa, coffee. Look no further. That's where the money is going. So to ignore the commodities market is to ignore a bull market. Why are we going to do that? So it doesn't always have to be about equities. There's always, I don't like to quote Kramer, but one thing he's right about, there's always a bull market somewhere. So we're looking for that right now. And unfortunately for the consumer, a lot of people are out there not appreciating the environment that we're in, and we're not in a good environment for inflation. So I think that what we have going on with soybeans is a massive, massive higher low. Here's our higher low. We stopped going down here the week of February the 26th, along with nat gas. A lot of commodities bottomed out that week. And there you have it, folks. Crisp, clear. Once we break out of this formation to the upside, it's going to be game on. You're going to get short squeeze. Wheat broke out the week before last week. I would not call this a successful retest. I'm kind of disappointed here with the price action on wheat. It did not hold support. Technically, it broke back down into a trading range. We'll see what the new week brings, but we're not opening up strong here at all. They tried to close it strong on Friday. They couldn't do it. Oil prices now down a half percentage point, really falling apart. So risk-off environment, folks. It looks as though we are probably going to get a rally tomorrow in equities. This is the NASDAQ 100, building on earlier gains. Well, it looks like we're moving up higher here. This is a news-driven market right now, so be very, very careful. Let's go back to some comments. I know a lot of people are commenting. Longer term, not right now, Lion. They're going to take a pause. You're welcome, Alan. We went over that one from Kelly. Why did JP Morgan gap down so bad? Earnings, Kelly. Forward-looking guidance not looking good. Joel, closing all my shorts on Friday was a good idea. Yes, a little bounce going on, not based on anything but technicals. Well, the technicals for the equity markets are not good. I mean, last week was not a good-looking week for the equity markets. So I would be very, very careful with chasing any rally here in the equity markets, because while commodity prices are coming in a bit here, the one thing we can't lose sight of is what we went over earlier. Nobody wants you to pay attention to this one chart, and it's this chart, and it matters a lot. I'm losing my voice. My apologies. Here's the chart. All we're doing is putting in higher highs. Here's the weekly chart of the 10-year yield. This is very bullish. And that's not good for equities. So am I going to chase this market tomorrow? No way. I am going to be looking to take shorts off. Apologize. Longs off, get more neutral, if not more net short the market. Because what's not going away? So we had We had Iran, Israel, perhaps, hopefully, that's been sidelined now. Is inflation going away? Maybe if oil continues to collapse, as it is right now. I could not collapse, it's correcting. Maybe, but RBOB gasoline prices are up with oil down. So we'll see. But this is not going away. Let's check back in with Bitcoin really quick here. Nice reversal so far on Bitcoin. Okay, I don't have a lot to go over here, but what I do have to go over is economic data and earnings coming up this week. We want to talk about the Fed Watch tool as well. So we have, wow, it's 6:44 already. Wow. We have more Fed heads coming out tomorrow. We have retail sales Tuesday, housing starts, building permits being a forward-looking indicator for the equity markets. We got Jay Powell out tomorrow, 1:15. Don't ignore that. For whatever reason, he's been giving more and more intra-week speeches. That's not common for him. He lets the other Fed governors go out there for whatever reason. He's giving a lot more speeches now. And clearly what they're trying to do, you're seeing an increase overall in the Fed governors going out there and giving speeches. The question is why, right? Why are they doing it? I think it's that they're trying to massage the narrative. And massage the narrative means is that the narrative changes every single day. So if one says something, the other one wants to like goose their behind to make sure that the markets are following through. And it's really a soft glove approach. Wednesday, Fed beige book, important. Thursday, initial jobless claims. We get that every single week. 10 a.m., another 10 a.m. report coming out on Thursday. We had consumer confidence out last Friday on 10 a.m. report. Don't ignore these 10 a.m. reports. They're important. A lot of people only think about 8:30 reports. No, 10 a.m. reports come out as well, and they can move the market, especially if they spike the market up higher or gap the market down lower. It could just be a setup for a 10 a.m. report and a reversal. So 10 a.m. Thursday, we're going to get U.S. leading economic indicators. Bostic comes out twice in one day. Lots of energy out of that guy. He's always talking. Friday, Goolsby out again. They're loving him of late. And he's really, really in with the political powers in Washington. So he used to be part of, I believe it was the Obama administration. So the real story this week, folks, is not going to be economic data unless, of course, it is really bad stuff. What's really going to matter this week are really two things. One, earnings. Two, the Fed Watch tool. We'll go to that in a moment. Now, we have coming out tomorrow morning, Goldman Sachs reports in the morning. We have no position on. What I'll be interested in is Charles Schwab. Why? It wasn't too long ago that Charles Schwab was very concerned, or the street was concerned about the health of Charles Schwab being a part of the regional bank sector. We'll see how their report comes out tomorrow. That'll give us a glimpse as to where the KRE, the regional bank sector, is going to go. They performed better last week on certain days than what did the XLF. On Tuesday, we got B of A, UNH, J&J, MS, Morgan Stanley, Bank New York Mellon. So a lot of big money center banks coming out this week, investment banks and regional banks are really following through on Friday's beginning of earnings season. Then on Wednesday, we get ASML, that's a European semi-stock. Abbott Labs comes out. We're also, after the close on Wednesday, going to get Alcoa Aluminum. Watch aluminum prices. It's a very interesting story that's taking place in that sector. CSX Transport comes out. More Bank of Ozark, the regional bank. Thursday is going to be really the Pimp Mac Daddy of the week in terms of earnings data. Why? Because you have Taiwan Semi coming out in the pre-market. You After hours, you get Netflix coming out. And then on Friday, you're going to get Amex, P&G, and more not money center banks, regional banks coming out on Friday. So it's going to be a very, very busy week. The street may shrug off a lot of strong earnings data, which would technically be negative for the equity markets in lieu of positive reports on earnings out of the S&P 500. So buckle up. It's going to be a very volatile week going into the new trading week. Now, one thing I did notice as I was watching and prepping for the show tonight was that the expectation, I have not refreshed this since we went live, expectations for an ease rose from about 22% on Friday afternoon. That's when I recorded the week ahead commentary after the market closed on Friday, to now 28.3. July, it also risen to about, I think it was 77%. Let's check it out. Excuse me, sorry, 57%, now 58.2%. Let's do a refresh here. I want to see, with the equity markets rallying, has this come off at all? No, actually, the probability of an increase in June, I don't think this is sustainable. I don't think this is going to last. This is why you're seeing equities rally right now, in addition to the risk-off events over in the Middle East, is that you have now a probability of an ease of 32% in June, and in July, 58.2. So now we went from a probability of no cut in July to now the probability of a cut. And I think that's what the Fed is trying to guide the street towards. I don't think they're going to make the cut in July, but this is the new carrot and the stick. Look at July. Don't look at the economic data. God forbid, don't look at the economic data. Don't look at the commodity prices, because then you realize we really can't cut rates. Listen to Austin Goolsbee. Listen to the Fed heads coming out each week, and then watch the Fed hike tool, and then trade in conjunction with where the markets believe the Federal Reserve is going to cut rates. Right now, they're honing in on July. I don't think it's going to happen. S&P 500 multiple trailing 34.02. Very, very expensive relative to the mean of 17.11. We haven't been down there in a long time. All right, so this speaks to Iran, Israel. As it stands right now, there does not appear to be significant escalation in the rhetoric. That could all change very quickly, if in fact Israel decides that they are going to somehow counter this attack. That'll be a major, major escalation in this warfare. Consumer credit. I think a lot of very, very poor consumer credit reports coming out. And this is just one of them. Just in U.S. credit card delinquency rates are now at their highest on record, according to Philly Fed. That's a bold statement. Think about it. We've had the dot-com bubble. We've had the financial crisis. We have had COVID. COVID shut down the economy. Yet delinquency rates on credit cards are higher than then. Think about it. In Q4 2023, more credit card balances were 30 plus and 60 plus days past due compared to any other period in history. This does not include buy now, pay never. Think about that. That's another black hole of disappointment that's coming down the pike, but nobody wants to talk about buy now, pay never. So be careful of that. Watch the stocks of these names. I forget, one of them is out there. It'll strike me in a moment. I forget which one it is. If somebody remembers it, please put it in the chat. I will highlight it. It's just not hitting me right now. It'll come to me in a moment. The percentage of credit card balance is at least 30 days past due is now 3.5%. Thank you, Mike. Appreciate it. Affirm. AFRM. Let's take a look at how that stock is doing. Here's buy now, pay never. Probably one of the fastest growing areas in finance. Overall, we've pulled back. Overall, not a horrible chart. The trend is still up, but this year has not been friendly. What are we down so far this year on buy now, pay never? 33 spots, 62%. Not good. Now, when you take a look at cocoa, this goes back to what we were talking about earlier. On a yearly chart, that's up 149.5%. So give me cocoa versus buy now, pay never. The average credit card interest rate, wow, 28%. My God. The average credit card interest rate is also at a record of 28%, according to Forbes. Incredible. Also off the Kobisi letter, breaking U.S. Mortgage demand in March fell to its lowest since 1995. I bought my first house in 1994, and that was the depression in housing back then, because that's when you had the S&L crisis here in the United States. For those folks that are over in Europe or Asia watching this, that's the why behind that event. Mortgage demand is now 43% below its record peak, 16% below the post-2008 lows. Meanwhile, the average payment on a new mortgage is now nearly $2,800 per month. This means that the average American household would spend 45% of their pre-tax income on a new mortgage payment. That is bananas. Crazy. Retail apocalypse going on out there. And this is just a slow-moving train wreck. Bed Bath Beyond, out of business. Walgreens closing 505 stores. Rite Aid, bankrupt. Tuesday morning, I believe, is bankrupt. CVS closing 279 stores. It goes on and on. Whoever heard of a 7-Eleven going out of business? Here you have it. Dollar General in a lot of trouble. I don't see Dollar Tree on here. They're in trouble. I'm surprised there's even a Barnes & Noble left open. Bank credit has collapsed. Now, this is serious. When you get the banks that stop wanting to lend to each other, that's a problem. That's a problem, because if they don't want to lend to each other, they're not going to want to lend to you. So here we have bank credit has collapsed. The last time we observed this type of contraction, the great financial crisis occurred. We are here. Here's the bottom of the GFC. This is after the collapse, folks, not before. We began to roll over 2008. I remember it very, very clearly. And this was the bottom, and the Federal Reserve was aggressively cutting rates. And this is Liz Young, the lovely Liz Young out of SoFi. Earnings season back. Consensus for earnings and revenue growth of 3%, with earnings growth expected to accelerate for the rest of the year. Expected. Upside surprises wouldn't be surprising, the economy, but guidance is. Upside surprises wouldn't be surprising. I don't understand that. But guidance is a bigger question mark. Well, we saw guidance out of JP Morgan. It was not wonderful. And here is expectations for the rest of the year. Earnings in blue, revenues in purple. Q2 not expecting much. They're expecting a lot out of earnings. You know, to get this type of spread between earnings and revenue, that means there's probably going to be a lot more layoffs happening. So watch the job numbers. And I think, let's go to comments. Yeah, right, Mike. PayPal's in that space too. Buy now, pay never. Yes. LAC, let's take a look at that. We'll do a couple of chart requests. I'm going to call it a night. My voice is going. LAC. Oh, Lithium America. Yeah, I know this stock. I know this stock. Yeah, we've gone over this before. LAC. Weekly chart favors an upside event according to the squeeze. Okay, I guess it's a newsletter of some sort. I won't disagree. We have a higher low. We've had a weekly consolidation up above a volume shelf. So odds are bullish move up on Lithium Americas. Wing. Consolidation, weekly consolidation. I think this gets resolved to the upside. Somewhat bullish. Let me take a look at the monthly chart to get a vibe for it. I don't go over this chart all that much. Very, very extended here on Wingstop. But the path of least resistance remains higher. It is not as short. Looking at the weekly chart, it looks as though it may want to break out. So odds favor bulls. Yeah, odds favor bulls. We'll leave it off with the firm. For Michael Matthews, AFRM. So I'm going to begin, which I rarely do, because I already know what the monthly chart looks like. I'm going to begin with the daily chart, and we're going to work our way back. We know we're down over 30% on the year so far. Is it time to buy? Well, according to the daily chart, no. No, it is not. When you take a look at a weekly chart, no. Bearish reversal bar on the week. 35.32 is resistance immediately above. It looks as though we're going to head down here to this Fibonacci retrace at around 31.45. The story changes on a weekly chart, a monthly chart. So the month is not over yet. The however is that at current, $35.32 is significant support. If we close the month of April back above that resistance level, then we should expect a probable rally. If they close this green by the end of the month, that would put in probably a short-term bottom on, probably not even a short-term bottom, probably a longer-term intermediate bottom on a firm. It'll probably move up higher. So that's my take on the firm. Thanks for being here, folks. Have a profitable trading week. Don't forget, don't chase this market up higher. Yields are everything. Keep an eye on yields. If they make new weekly higher highs, any rally in this market should be viewed with skepticism. Have a great night. Talk to you soon. Be well.